Hello traders, welcome to the post-session review. Today is Monday, September 23rd, and I want to go over our intraday trade, and I also want to go over our longer term trade. So starting off with the transparency component of the intraday trading, today we had two trades, one winner, one loser. The winner outweighed the loser, allowing us to make an overall $120 profit. Okay, and $120 here. The account balance is 2830. Here's 2830, 83. So we're penny for penny. We're in day 41 of this mustard seed or 5K challenge. We're still in drawdown, but we're still fighting. We're still digging in there and clawing our way out of this. And remember, again, our goal is to grow the account. And as you can see, that with the exception of a few break-even days here, that's not really a break-even day. This one here. Overall, we've been, doing pretty well when it comes to, getting on the winning side of things here. We're slowly finding some consistency in our wins. We're still dealing with a very volatile market. We're still dealing with very big swings. We pose a big challenge to small accounts and to risk management, but we're doing the best we can with the cards that we're dealt. And here we are at day 41, and we're still I'm fighting. So I'm very overall I'm very pleased with the risk reward component, with the money management component, with the trading state component. All very good things, with the exception of a few blunders here and there and a few undisciplined trade managements. Today is one of those, but we'll cover that one. Overall, we're doing fairly well. Let's get to the trade, or the trades. And as we can see, overall the day today was had a bearish inclination to it. We had a swing here followed by a proper correction, weak new structure low, very deep, very weak new structure high overall here, and the market came down to produce a new structure low. Overall expectation was for a new structure low. As price came back up here, did not make a proper correction. Okay, and the market came down to make a weak new structure low again. And overall, what I saw on the day, let me bring in the chart in a little bigger context here so y'all can see. As we can see that the market initially came up here and then made a weak new structure low. We see that the sellers started attacking early here, so I felt pretty good about the market maybe not making an overall complex correction into a qualifying correction. So I made the decision to trade the shorter term order flow, which was also bearish. And in looking at that, this was my main swing, what I was looking at. And I seen the sellers attacking early, told me that I would probably not see a shorter term new structure high above this and a complex correction into a proper correction of the main swing on a slightly larger scale. I also saw the buyers defending, but it also looked like they were being met with a lot of resistance in these areas here. So as price came up here, I knew that the sellers should not, that the buyer should have never been allowed to climb up here. However, this did pose a very good risk reward into an area that the sellers did attack from. And when I saw the rotation, I took it. And price went initially in favor a little bit, and then price found a little support here and came back out to take me out here, and I got taken out. Okay, then as price came back down here, okay, found support again to make a new structure, another weak new structure high to the upside. And as price came back down, I was looking for an overall complex correction into another new structure high, and I was targeting the 1-to-1 up here. So as I got long here on the higher low, I was looking for, well, the market went in favor and then it started going against me a little bit. I got a little concerned that the sellers were back down here. My stop was where it needed to be, down here, which I wasn't thrilled about, but it is what it is, right? So as the market started coming back up here and started moving in favor, I started feeling better until this situation. Now remember, I just said something that was very critical. I felt pretty good about my trade until price got here. Now remember that no matter how I feel about my trade, that shouldn't dictate a course of action as far as breaking a rule and doing something sooner. However, I did just that today, and although I did take the majority of my swing, I did not take what I needed to take. I came about 20 or 30 points shorter than I should have because I decided to manage my trade more aggressively. But I'm going to tell you the reasons why I did, so that you're aware how sometimes our intellect, how our ability to read the chart and understand strength and weakness can sometimes help you, can influence you into taking some actions that rules don't say to take. As a result of that, more often than not, you may get away with it every now and then, but for the most part, long term, you're going to leave money on the table. So as I got in here, I started seeing the buyers trying to come in and the sellers immediately absorb them to come back down to these lows. This wasn't something that I wanted to see, and I did feel better once price broke above this area here, and as price started making highs, I felt comfortable and good about my overall trade. As I felt that my trade was gaining strength again, and I knew that 63 was going to be a level that the buyers needed to hold on to. As we can see, 64 right here in this area here, and the sellers attacked from below. So I knew that 63 was a critical level. So when we got above that, I felt good about my trade, and so we came back down into here and saw the buyers come in. Again, I felt good about it, but I also saw the sellers trying to defend their ground here. And for the sellers, the area that they needed to defend with more conviction was overall 95 up here. Okay, this is where price just didn't like to be. So one of the things that concerned me about the strength of the overall buyers, that we gave back 63, and we shouldn't have done that. And every time the buyers came in, the sellers try to come in to reabsorb them. So I thought I was in for a problem. I did get to a break even here, because if you look left, you know, I always tell you guys, where are the sellers, where's the strongest structure. And although this is the high area of the swing, we can see that every time the sellers come in at this level, price really collapsed. And I didn't mind being taken out of break even. I could always re-enter. Okay, but that I didn't end up being taken out at a break even, but I did see the buyers getting weaker and weaker, and I saw the buyers give back an area that they should not have given back. Okay, so one of the things that I told my group that I was trading with today was, I wonder if the sellers have done enough, and this is just the sellers allowing the buyers to come in for them to hit them hard at 95, which is the level that they must defend. Okay, so as I was saying that and price was climbing up, I was feeling really good about my trade, and then the sellers sure enough came back in really hard, and came back down past 63 again. So I got really concerned overall about my trade. I did survive the break-even point as the buyers did come in here, and as this came up here and the sellers started attacking early, I felt really uneasy about my profit target. And as price came back up here, okay, and make that weak new structure, how the sellers come in again, I started trailing at these highs, because I felt that if price came back below that, sure enough, we were going to get a deep correction. After all, we did achieve a weak new structure high. What I should have done was get to the 38% of the new main swing, okay, and put price below that. But the 38 was never reached, so my stop would have been fine if I would have been trailing there, and I would have gone on to be able to then resume trailing of my stop at the 1-to-1. However, I decided to get overly aggressive as I watched on a number of occasions my trade be up 20-50 points and end up back to like 10 and 5, and I saw, and this really bothered me. So I decided to get really aggressive near these highs, you know, in anticipation that the sellers might get something going here and come back down, because at the end of the day, the market is expected to make a mid correction and then a new structural low. I say mid because although the projection here is not fantastic, the momentum is really fantastic, and every time the buyers came in, the sellers came in to be able to reabsorb them completely almost, and I was concerned this market may not have a mid correction overall. So these are the factors. I read into the chart too much. I read, you know, strength where there was strength, but my rules clearly said to not care about those things and to manage my trade based on what price achieves. Instead, I let my intellect and my skill set interfere with my rule set, I did end up well. I mean, I did a good job, but then I did leave some points on the table because I let my intellect interfere with my trade plan. Okay, remember, we're not here to filter anything out. We're not here to second guess ourselves. Our trade plan speaks for itself. It has been tested and validated over time. It's just a matter of see and do, see and do, if then, if then. Okay, but overall, you know, I can't beat myself up too bad. The positive is that, you know, although I did take a loss, I then was able to take a trade that erased the loss and then provided an extra 20 something points of gain that the account needed. So overall, that's the situation here, and I'm okay with that. The only thing I'm not okay with is that I did leave some points on the table because I did not follow a rule. And it's always good when you don't follow a rule that you pay a price. And today I paid a small one, but I did pay one, and that's good. You know, it's always bad when you break a rule and you get rewarded for it through price and profit, because then it gives you a false sense of entitlement to follow the rules only when you care to, and that's not what we're here to do. But overall, you know, I did break that rule, but it wasn't too bad of a problem. But again, it should be a big problem because I should not break a rule. I let my intellect steer some of my decision making, and that's something that we should not do. And I will work harder moving forward to allow that to not come into my trading. Okay, now in the longer term, let me bring that in. Okay, on the longer term, we have price making a high here, then a higher low, and then we have price make a new structural high on increasing momentum towards the second part of the swing, huge projection, and we have a complex correction, higher low. Okay, ABCD, this leg here, okay, is down here. This is where I got long. I had a limit order set there. I had decent absorption here overall, and I had some absorption to protect me down here. I did have a second limit order to enter here around this level here, but as my break-even rules got triggered, I canceled that order and got to a break-even. And now when price hit the 618 of the ABCD pattern, I locked just below the 38%. So I locked in 120 points, which is about 60K. And as soon as price starts interacting with these highs, I will lock in behind the profit target of the ABCD pattern, and I will give price room to go on into the new structure high expectation. Okay, there's no other harmonic pattern here. Although this was a nice correction here into the 618, this one was way too deep. So we don't have a Gartley pattern here whatsoever. We don't have any pattern here other than an ABCD decompletion into a expectation of a new structure high. So this was a very, very clear no-brainer entry for me long. The risk reward was more than acceptable, and price pretty efficiently climbed to the break-even point, and then very efficiently got past this area here. We can see that the buyers defended this area fairly well, and it was just not until most recently that price came down here. Then the sellers defended really well, and then the buyers were able to get past that. So I expect that it would be important for the buyers not to allow price to fall back below this area. Okay, and I think that the sellers are probably likely to defend this area with more dedication. So hopefully we'll get price to come up to this area here, and not start defending these minor levels here that we see that the sellers came in to push price down. It looks like the sellers attacked it briefly, but it looks like overall the buyers are trying to defend as well. As we can see right here, that there's a little battle going on there. Nonetheless, we're up 211 points right now. We've locked in 120. If price breaks above this area tonight before I go to bed, I believe I will lock in. I will lock in just below the 618, or give the market more room, let it compete for that new structure high. But I will lock in some more points, probably below this area here. Lock in another, let's see, 24 points will be 40. I'll lock in another 50 points, which will bring price to about 30, and we'll go from there. We'll lock in another 50 points, and that'll give me a nice return on the drawdown that I'm having on this larger account for the month so far. We're still about 7 days or so away from the end of the month, so there's still time to make that up, but that's not the goal. The goal is to make good decisions, to give the market some room, and to allow me to capitalize from this this move here. Really nice entry. Price didn't go against me all that much. It also didn't give me an opportunity to scale in, which is a little unfortunate, but based on the drawdown, it also doesn't bother me too much. As we can see, the sellers have been very, very active in trying to stop the buyers as a whole, and they have definitely poured in a lot of money to stopping that. Now, have they achieved that? Does imbalance still favor the buyers? Are the sellers just wishful thinking, trying to stop the buyers, and all they're doing is just wasting money? I think that's a little unclear right now. But what is clear is the expectation of a new structural high. I think that the sellers have failed to defend some critical areas, and that the buyers have defended their areas here, as we can see here and here. The buyers did defend, score. The sellers did try to defend, did not score. Sellers did not score for this level. They should have here, and now as we get into some other levels up here, we'll see how they handle. Now, the higher we get up into this area, the more the sellers are going to be committed to defend, right? Because it's cheaper to sell, they're getting better pricing. There should be more supply up there, and we'll end up seeing what ends up happening. But for the most part, I'm fairly pleased that the buyers are the ones that are defending and winning, and the sellers are trying to defend marginally and they're losing. And that is, those are all good signs for our trade. I hope that this adds value to you. I hope that you enjoyed the post-session review today, and Wednesday there's a live stream, so make sure you tune in for that. You know, in the requalification process here, one of the things I forgot to mention as I was going through these trades, as you can see that my expectation was for a new structure low, and then I gave you the reasons why I felt that the market was not going to have a complex correction or a mid correction as we would have expected from the overall order flow expectation. But once price did make that new structure high, and in the immediate order flow we were looking for that long, I did not hesitate to wait for any further requalification. I think as soon as you have price achieving something that it should not have achieved, and you want to scale into a smaller order flow and trade that, then that is the time to do it. The more you wait for requalification or reconfirmation, the more you're passing up on that precious frequency to get to that expectancy. You know, we never know completely when an expectation is going to fail. Okay, no matter how strong price looks to the downside, no matter how impressive things look or how impossible it looks for the buyers or the sellers, you know, you need to hold yourself true to that order flow. And that's what we did here. Once the market started fail here, and we had the deep correction offering us the risk reward, you know, this could have been the one that, you know, played out to the downside, you know. But once I made that switch to trade that shorter term order flow, that's what we need to keep trading until that fails, and it gives you realignment, and then you're back aligned with the longer term expectation, offering you really, really good overall risk reward that's going to definitely offset that one or two losers that you got in the short term order flow. The issue comes when you start waiting for, okay, price achieved this, now you're waiting for the higher low, and then you're waiting for another new structure high to confirm, and then you're waiting, you know, and you wait and wait and wait, and then you don't get an entry because you didn't get a rotation. No, once price achieves something that it shouldn't have achieved on the immediate order scale, the immediate order flow scale, you need to get very aggressive and start trading that until it fails, because that short term or more micro order flow may give you 5 or 6 swings into that deeper correction that you were overall expecting. And if the expectation fails, well, it doesn't matter, you're already on board, you're already trading that. You didn't wait for the overall failure to then come back and realign yourself into another huge gigantic swing. Because if this is our main swing and we have to wait for that to fail to the upside, guess what your new main swing is? Even bigger than that one, right? So the sooner you can scale into a smaller order flow that you can trade, okay, then the sooner you can do that, the better it's going to be on that whole frequency to get to the expectancy standpoint. Okay, you're going to take some losses, okay, but those losses are going to be offset by your gains as long as you stay active. Okay, staying active is the key. Getting involved early in that micro order flow as early as possible is critical to that expectancy. Frequency to get to that expectancy. There's still work to do on that front. I know it's not easy, and I know that there is a sense of fear when it comes to scaling into a different order flow, wondering if that correction's near its ending point. But if you get the risk reward and you have some confirmation that price wants to head higher, by all means, take it and stay aggressive. Stay on that order flow. Don't switch back until the expectation fails and you're already realigned anyway. You're getting in after that correction on the pullback, which means what? If it's up here, you already have that risk reward. You're already in by default by letting that shorter term order flow lead you into the next order flow, because it all ends up in the same place. Okay, but the key here is getting aggressive early in that corrective process and staying on that frequency as best as you can. I understand that sometimes price is just not going to correct into your area of interest. I understand that sometimes price is going to get into your area of interest and you're not going to get the rotation. You may want to start working on some testing on some alternate triggers to enter the market, whether it's absorption, whether it's a candlestick pattern that plays out more often than not, or something. If I had to give you one, that would be anything that shows buying pressure. Any rejection is better than nothing, because a rejection or buying pressure in this particular case would indicate some absorption by the buyers on the sellers, and that's always a good thing. But come up with one or two triggers in the absence of rotation that you can get involved early, especially if the risk reward is there. If the risk reward is there and it's an aggressive trade, then the risk reward is going to offset that loss. And if you're wrong, it doesn't matter. You are realigning yourself with the strength in the market. Okay, and overall you should be okay as long as you get involved early. You're not sacrificing on that frequency to get to that expectancy. But you got to start somewhere. The earlier you start, the better off you will probably be. Okay, but I did deal with those emotions, because after all, what is the expectation? A new structure low. What was my overall expectation? A mid correction that I thought I probably wasn't going to get. And every time the sellers got into this level here, immediate structure at 38%, the sellers got very aggressive, and they got very far. So I got concerned here when I saw this, and it pushed me to what? To be overly aggressive with my trade and manage my trade in a way that's not in my trade plan. Okay, that's on me. Okay, did I have technical reasons to do that? Yes. But does my trade plan say to have that if I see strength I need to do this, and if I see strength I don't need to do that, and if I see strength I don't need to do something that's in my trade plan? No, my trade plan says if price does this, then I do this. Okay, the only thing I should have done here, other than nothing, was as price made a weak new structure high, I needed to get trail my stop below the 37 in case price does make a new main swing and falls below that. I can be taken out. Okay, and on that weak correction, now the weak new structure high, I should get a deep correction based on the order flow expectation, which would give me an opportunity to re-enter, and I didn't give all those points back, especially if it ends up being a possible break even. I took the profit, and then I got a chance to scale in again down here. So you saw me do that in the last couple of live streams, but I did not manage this trade like that because of what I saw, because I saw what I wanted to see and I didn't see what was there. So what was there was nothing more than price made a weak new structure high, and because of that I should have drawn a fib and trailed my stop below the 38 until price gets to my overall trailing rules, or I get stopped out below the 38. That's it. That's all I should have done, but that's not what I did. It wasn't a terrible hit. I mean, I did leave some points on the table, but it wasn't too much, as we can see here. I left I would have been taken out somewhere around here, so I left 23 points on the table. not an overall big deal, but still a slight disappointment. I should be better than that, and I let the overall visual representation of what the sellers were doing bully me into being an aggressive trade manager, which was slightly more emotional than on rules, right? Because although it wasn't managed on fear, it was managed on technical aspects. My trade plan had me not doing that. So that's an emotion. That's not mastery. And I just wanted to make that clear distinction, so when you look at this and say, oh, but I saw, you had reason to. I had reason to. There's always a reason. You can stare at a chart and find 10 reasons to get into the trade, and you can probably find 20 reasons to not take the trade. Okay, but at the end of the day, what's your trade plan say to do? That's what you need to do, because that has been tested outside of the emotional component to be profitable. And if that's the case, then it should be easy for you to act on that trade plan. But it's always, not always, but sometimes it's easier said than done, and I think we all know that. But that's it. Tomorrow we'll work on, be more disciplined on my trade plan, and continue to press on. On the spreadsheet, I wanted to show you guys. We looked at the equity curve here. We can see that, we've made that new structure high, and now we're like testing this structure area here, but we anticipate us bouncing through and making another new structure high. We're in a little bit of a possible complex correction here, and we know that we can't get below this area here, or else we've made another new structure low. I know that's just a little trading humor for you, but we're getting up to this area of structure here, and we're testing that area. But the expectations for price is for us to get through that area on the equity curve. So we will push hard to do that tomorrow and Wednesday in the next live stream. That's all I got, guys. Thank you very much for your time. We're up 211 points right now, and that is 211 points times $500 a point. We're up about 105 K. We locked in 60. I'll probably be staying up a little late today to make sure to see if I can have the capabilities to be able to lock in a little more. I think that will happen if price gets to let me bring that in. I think if price gets to about this area right here where the sellers really came in, I'm gonna get a little more aggressive and lock in some more, and we'll see how that plays out. Okay, that's all I got, guys. Catch y'all tomorrow on the battlefield.